There is just an awful lot of stuff going on this morning, so bear with me. This might go a little long, but let me start out by saying that the markets are whipsawing. They don't have a clue which direction to go because, again, there is a lot of reporting out this morning, a lot to report, and with Tesla as well, of course, because obviously the Model Y broke last night in the United States and Europe, price at 60,000. Some people are saying that that is an increase. We'll talk about that in a second. Other people are saying, no, this is a very, very good deal. But again, let's get into that. Let's start with this. This is what the most important thing I think of the morning. I'm going to just start right at the top. Tesla Roddy saying this from a reviewer who's actually experienced the new Model Y driving it, as opposed to just walking around it and looking at it. It's even better than I expected. After opening it, I don't want to drive my old Model Y anymore. The gap between them is really too big. What in the world did you create, Tesla? So anyway, that is, I think that's the summary that I'm looking for with regard to the Model Y. I'm expecting the Model Y to do very, very well, both from the standpoint of its creature comforts and its and designs and all the new gizmos and things that it has in it, but also just from the standpoint of it being probably the best driving car. Maybe the Model 3 will be better in some regards, like, because a little smaller, a little might be maybe a little better on the track, whatnot, a little faster. But between the two, why would you want anything else? Anyway, Tesla has opened modestly higher in a modestly higher market, although it's mixed and it's going up and down. It's obvious that Tesla could cure cancer right now, and it wouldn't move the stock very much because all eyes are on next Wednesday. What might move the stock is pre-earnings positioning. So I wouldn't be surprised, regardless of the news, to see Tesla trending down between now and next Wednesday as people position themselves for disappointing news. My guess is that that's what's going to happen. Of course, the big news today is the Juniper release in all markets. Um, uh, uh, yeah, I already said all that. But by the way, I did an hour before this already this morning with AJ, which will be on tonight at 7:45. You don't want to miss that one. So this is not as maybe organized as I normally am. We'll take We'll also have Brian Wang on later tonight, and he and I will take a much deeper look at the Model Y. By then, we should have a lot of information that we don't have now. All right, Herbert Ong says this. He says, Tesla AI executive says, prepare to be shocked, replying to how good full self-driving will become. So this was Phil, he's quoting Phil Dwan, who's available on X under Phil Dwan, D-U-A-N, and that's what he said. Specifically replying to somebody else, he says, prepare to be shocked. Yeah, I mean, all the reports I'm hearing out about the most recent releases are it just gets better and better and better. From 𝐒𝐻𝐚𝐲 and from Dirty Tesla and other people are saying it's just absolutely incredible right now. I haven't been in an automobile. Well, yeah, I guess I went to the grocery store, but it's four tenths of a mile away. So I don't know personally, but all the reporting is really, really excellent. From Barron's this morning. Prices for the new Model Y start at about 60,000, excluding any tax credit. That's the launch series version of the car, which comes with the company's highest level of autonomous driving software called FSD. That feature was worth $8,000 by itself. So now you're talking about a $52,000 base. Excluding FSD, the new price is about 52, which compares with about 48,000 for the current long range Model Y. Prices are up about 8% if you do it that way. But you got to take into consideration that this is not just the long range version. It has got extra stuff built in, including, I believe, the tow package is free if you want it. It isn't surprising that the new version is more expensive. Tesla says the new Y has been completely redesigned. Still, higher prices and lower demand. Yeah, what's going to happen? Okay, what we're doing here in Barron's is completely missing the point. They're doing the same thing that they did with the Cybertruck, what they normally do, and that is you skim the cream. This is what we do in marketing. We skim the cream. When the product first comes out, if we believe there'll be high demand, you you put together a package, or you maybe just charge more for what's going to eventually cost less because you've got early adopters that are going to pay whatever you, not whatever, but a much higher price than people will downstream. Very, very common method to use. Now, Tesla is doing it in a way right now, though, according to my sources, that this is a very good deal. The extra benefits that you get with this a launch version make it worth at least 60,000, and this is a very good deal. Anyway, I don't think it's going to impact anything. There were people all over X last night saying that they'd already placed their order, showing pictures of their order being placed. There's massive pent-up demand for this vehicle. So I think for the first few months, they will be selling out, and there will be waiting lists going into maybe even into the second quarter. The new Model Y pricing for the US comes just after Tesla raised prices for its Model 3 and Model Y in Canada. Still don't fully understand what's going on in Canada. I'll keep my eyes open for more information about that. We only sold 50, 60,000 cars in Canada all of last year, so it's not that big a deal. Higher prices around the globe can help Tesla's private margins, but it will make it harder for the company to grow sales, et cetera, et cetera. Tesla delivered about 1.8 million cars in 2024. We know all this. Elon is expecting, of course, 20 to 30%. One thing Musk might be banking on to boost sales is the new Tesla model, typically referred to as the Model 2 or the Q 2.5. Prices would ideally start below 30,000. Having a lower price model might also give Tesla a reason to raise prices in order to differentiate. So yes, that is also true. If the 2.5 is coming out anytime soon, you might want to create X amount of difference between the vehicles. Quite frankly, I think it has way more to do. Tesla's very, very sophisticated at knowing how many people are going on the website and then moving through the website to make the purchase, and then seeing overall how, anyway, it's very sophisticated. The Humanoid Hub says this morning, hiring for Tesla bot manufacturing, for Optimus manufacturing is ramping up. 11 new jobs were posted within the past week for Fremont and Palo Alto. Anyway, one of the job descriptions states engineering technicians within the humanoid AI robot team will work side by side with engineers to support and sustain the research and the development of our prototype robots and subsystems. You'll be building and repairing the first iterations of the machines that make the machines, including highly actuated and electronically/computationally dense robots. The questions so far that are up on Ask or say.com. If you want to go there, you should go there. The questions that are currently there for next week's earnings call are okay. I'm just going to quickly go through these. Number one, is unsupervised FSD still planned to be released in Texas and California this year? What hurdles still exist to make that happen? Number two, are there any discussions within other auto companies about licensing FSD? We'd like to know that. I don't know if they'll be able to expose that. Number three, can you please tie purchased FSD to our owner's account versus locked to the car? That way people can move it from, yes, that everybody wants that. Whether Tesla will ever do it is hard to say. Number four, is Optimus now mostly design locked for 2025 production? That's not a bad question. Number five, when will Tesla start selling Optimus and what will the price be? Well, I think they'll start selling it in 2026, although maybe it'll be late 2025. The price would be lovely to have. I don't think we'll get that until fourth quarter. Number six, Elon has said publicly that long-term shareholders of Tesla will have the ability to invest in other companies. Could you provide some clarity on whether that's going to happen with regard? Of course, everybody wants some shares in 𝐒𝐭𝐮𝐧𝐝𝐚𝐲. Number seven, it is expected that Tesla will need to upgrade HW3 vehicles, et cetera. Give us some color on that. I don't think they're going to do that. I think they still think HW3 is going to work. What is the status at number eight? What is the status on mass production of the Tesla Semi? I'd like to know that. How do you project it will affect revenue when it's at scale? Of course, that's already known. They are expecting 40,000, but we don't have prices yet on what they're going to cost. Number nine, is there a new affordable Tesla model coming soon? Just a confirmation, in other words, that the Model Q, or whatever you want to call it, is coming. And then will the Roadster be launched this year? as planned. And then where is the question on 4680? It was number one just yesterday. 4680 is the batteries in general. We need a question that stimulates Elon to talk about the batteries. All right. This is according to Amit at Amit is investing. AMIT is investing. He says the Cleveland Fed's new tenant. Oh, this is I need to say this before I say that. This is Randy Kirk. I forgot to write down my note to myself. Like I told you, a little disorganized this morning. This is Randy Kirk. Like, subscribe, notify. We got Brian Wang standing in for the traveling Larry Goldberg, not available tonight, and Brian Wang will do a phenomenal job at around 5 o'clock analyzing today's news, stock, etc. And then, as I mentioned, AJ at 7:45. You do not want to miss that. I'm 100% telling you, you do want to listen. I've just recorded it. You want to be there for that. All right, the Cleveland Fed's new tenant repeat rent index fell sharply into negative territory at negative 2.43. That's the largest drop since the financial crisis in 2010. This signals easing inflationary pressures and potential relief in rent-driven CPI. However, it may also indicate weaker housing demand and broader economic slowdown concerns. While beneficial for tenants, the decline could pressure landlords and real estate investors and may foreshadow broader economic challenges if tied to reduced consumer confidence. Well, we'll talk about consumer confidence in a minute. Investors expect Fed Chair Jerome Powell to address this at the meeting next week on the 29th, same day as the Tesla earnings call, and discuss its implications for inflation cooling down, potentially leading to more rate cuts. Well, that would be fantastic. We'll see what happens. We've been talking about rent costs being down for a while now. This is a 1-month number. Do not put too much emphasis on 1 month. Now, on the other side of the coin, we've got folks leaving the country right now, immigrants leaving the country. We do not have more immigrants coming in. That is going to put less pressure on rents for sure. All right, this is the Flash US PMI survey. This is we'll be talking about both services and manufacturing. Further growth of business activity in January, with the rate of growth moderating, at least on the services side, from December's 32-month high. So December was really huge, signals a more modest pace of expansion. There's a return to growth in the manufacturing sector for the first time in 6 months, accompanied by sustained but slower service sector growth. Firms' expectations of output in the coming year, meanwhile, continue to run at a level not surpassed since May 2022, buoyed by optimism about the new government policies, encouraging firms to take on staff at the steepest rate in 2.5 years. So people are starting to hire again. We're starting to see this optimism. We'll see more and more of this as we go through this. However, inflationary pressures intensified to a 4-month high, with both input costs and selling prices rising and increased rates across both manufacturing and services. I expect this to decline with the things that Trump is doing. We will start to see declines. We just talked about rent. We've got oil prices dropping. I think we'll see declines ahead. Output and demand. The headline S&P Global US PMI Composite Output Index, the combined index, fell from 55.4 to a 9-month low of 52.4 in January. And that would be just a little bit lower, but still positive, showing positive growth. The slowdown was centered on the services economy, where output rose at the slowest price since April, albeit sustaining the sector's expansion into the 24th successive month. Manufacturing output, meanwhile, rose marginally, representing an improvement. Changing activity levels reflected varying demand conditions. While inflows of new business into the services sector remained robust, the rate of increase waned to a 3-month low amid the first fall in overseas export orders since June. Especially adverse weather was reported as a dampener on these activities. Future sentiment, optimism about the coming year continued to run at an elevated level, measured across goods and services. Firms expected expectations of their output in the 12 months remained unchanged in December, thereby remaining at the highest point since May of 2022. That was a very long time ago. Service sector confidence lost a little shine from December, which was at a 1.5-year high, but remained the second highest recorded over the past year. Manufacturing confidence, meanwhile, surged higher, reaching the highest since March of 2022, after showing some improvement in November. Uncertainty in the lead up to the presidential election has replaced with optimism about the future, notably among manufacturers, according to anecdotal evidence provided by survey respondents. Looser regulation, lower taxes, heightened protectionism were all widely cited, along a broader sense of improved economic conditions. All right, Consumer Sentiment Index. Now, this is this University of Michigan. I am truly beginning to believe that this is being impacted by partisanship within this department. I've been saying that for months. This is not a new statement by me. Just listen to the tone and see what you think. Consumer sentiment fell for the first time in 6 months, edging down 4% from December, while assessments of personal finances inched up for the 5th consecutive months. All other components pulled back. Indeed, sentiment declines were broad-based and seen across incomes, wealth, and age groups. Buying conditions for durables softened. That would be horrible, but remained about 30% better than 6 months ago. Well, that's good. All right. Amid persistent views about purchasing now to avoid future price increases. Despite reported stronger incomes this month, concerns about unemployment rose. About 47% of consumers expect unemployment to rise in the year ahead, the highest since the pandemic recession. This is just crazy. January's data closed on Inauguration Day, and consumers of all political leanings will continue to refine their views as Trump's policies are clarified and implemented. Year-ahead inflation expectations soared from 2.8 last month to 3.3% this month. I would have gone back and redone those numbers. I would have gone back and checked my numbers. That is a massive increase. The current reading is the highest since May of 2024. Long-run inflation expectations rose from 3 to 3.2. That was the same reading seen in November, so that had gone down and back up. For both the short and long-term, inflation expectations rose across all income and education groups. Concerns over the future trajectory of inflation were visible throughout the interviews and were tied to beliefs about anticipated policies like tariffs. So the headline, screaming about tariffs causing price increases may be having an impact. Consumers continued to spontaneously express motives for buying in advance to avoid future price increases. Well, if that's true, that could be helpful. All right, the final thing for today is Barron's home, what they call the existing home sales. Home sales fell in 2024 to 4.06 million pace. This is the lowest since 1995. Sales were even lower than in 2023 when it last fell to this level. The median price of homes that sold last year was a record high, $407,000. Despite the 30-year low, the market is showing signs of turning as home buying picked up in the last month of 2024, said the National Association of Realtors. December is typically a slow month in the real estate market, so the increase in activity is noteworthy. Sales of previously owned homes rose 2.2 to an annual rate of 4.2 million in December, the third month in which sales increased on an annual basis. That's the number of homes that would be sold for the entire year if it continued. Home sales in December were up 9.3 from the same month a year ago, the strongest annual gain in nearly 4 years. This is happening, according to Lawrence Yun, this is happening at a time when mortgage rates are not behaving. Although that's not quite 100% true, they are now starting to come down below 7% again. Despite elevated mortgage rates, people are coming into the market. Maybe it's simply due to more job creation, people's incomes rising, but in my view, it appears to be inventory shortages, and there's more inventory right now, but people are like, there's not going to be, and they're right. You know what I feel about this? The pace of sales roughly matched the expectations of economists surveyed by the Dow Jones Newswire and Wall Street Journal, but it was actually slightly higher. Home prices inched up in 2024. The median price of an existing home was $407,000, the highest ever recorded. But in December in particular, the median price sold was 404,400, which is up 6% for the same month a year ago. 6%, back to that 6% level, 6% year over year. Home sales during the winter are typically softer. We said that 16% of homes were sold above list price, which is down slightly from 18% a month ago. Homes received an average of 2.1 offers. Listed homes remained on the market for 35 days, up from 32 days. All cash buyers made up 28% of sales. All right, let's see how all of that news is impacting markets. I mean, that is a lot for the markets to digest this morning. So what they've decided is that overall, it doesn't matter much. I mean, yes, everything is down right now except Tesla. The Dow is down 95, NASDAQ is down 24, S&P is down 5, but as you can tell, those are very small differences. Tesla is up $2.76. Percentage-wise, that would be down 0.21% for the Dow, down 0.07 for the NASDAQ, 0.07 for the S&P, and up 0.67 for Tesla. The rest of the Magnificent Seven is mixed, but again, very small changes. The biggest change is Meta up 0.81%, and that is $5 on Meta. But overall, very mixed, very blah, very straight, not much. So my sense, what do you call it? Cathie Wood's also mixed, but narrow, just 15 cents, 20 cents up or down. Not really much change here in the Cathie Woods. So where are we going? We're going like flat across right now. Here's what I'm sensing. My gut is telling me. We've got Trump has come in and he's made all these changes, massive, massive changes. Stock market said, okay, we're optimistic. We'll go to all-time, pretty close to all-time highs. And now we're going to sit there. We're going to think about this for a while. We've got the Fed meeting next week. We have got all kinds of Mag 7 earnings coming in the next week or so. We have got lots of reporting coming in, like PCE, the end of next week. And it's really too early to tell the impact of all this stuff, although tremendous optimism out there among business, every level of business, extremely optimistic. So I think that's where we are right now. I think the market's taking a breather and trying to decide where are things going. I'm particularly, obviously, concerned about what's happening with bonds. I can't understand why they haven't dropped more, and I believe that they will. That is not investment. That's not investment advice. Everything in my bones tells me that the 10-year bond should be at 3.75. If that happens, mortgage interest rates will drop a full 100 basis points. Also, we could be looking at mortgages under 6 again. That would, of course, obviously help. Would help everybody. All right, let's see here. Let's go ahead and take a look at bonds, which are, I'm sure, not yet responding to my thinking. Oh, well, yes, they are. See there? Okay, the 10-year is down 7 whole tenths of a basis point at 4.63. Long way to go to get to 3.75, but we will get there. And the 2-year is down 2.6 basis points. That's going to help auto loans and stuff. And the 1 month is down 7 tenths of a basis point, similar to the 10-year. Okay, let's go ahead and look at oil. We have oil this morning down another 26 cents, 74.36. And by the way, Brent is now $4 higher. I'm thinking maybe Texas Intermediate is falling faster than Brent is what's going on right now. It has nothing to do with unease in the Middle East at this moment. But anyway, I think what we're going to see is, as I mentioned last night, I think oil continues down. I think it'll just be it'll be drip, drip, drip. It'll continue to go down pretty much until we get to about $60 a barrel. Natural gas down 3.3% this morning, well under $4 at this point at $3.81. You've got gold up 27, all-time high, 27.92, testing 2,800. Not surprising. A little bit of a maybe a little bit of a run to security. There's other reasons too. I should look. I'm going to try to remember to look into this a little deeper over the weekend and see, what's going on with gold for sure. Silver up another 1.5%, 31.3 this morning, and copper up 7 tenths at $4.33. I feel like it's always $4.33. Dollar slides a little bit. Actually, it's mixed. The headline is wrong. And Bitcoin up 1366 at 105.8. And there you go. So I'm sorry if I was a little bit hyper this morning, going through things a little fast, but I try to keep this particular show to around 20 to 22 minutes, and get it out to you quickly because you may want to take action this morning. Some of you do day trade, some of you do weekly trade or monthly trade. This is why we do the show every day for you. Again, you definitely want to come back and see AJ at 7:45. Brian Wang, are you kidding me? He does a great job when he subs in for Larry or others at when we do the daily review of what took place. That'll be around 5 o'clock. Might be a little earlier. I think if I remember right, Brian said he wants to do that a little early, so it could be early. Over the weekend, lots of good stuff lined up. More Brian Wang, in fact. Brian's been very active on the channel recently, but man, his stuff is just, he's just on another level in terms of the science stuff, as well as, some of the other things as well. Okay, and then last night, of course, we had, what did we have last night? I got so much going on right now, I can't even remember. Oh yeah, CERN Basher. Are you kidding me? Yeah, CERN Basher. I'll put that card up right here. You definitely, if you didn't check out CERN, it's always fun and also informative. So go check that out as well. Hit like, subscribe, notify, join Patreon. It's been great talking to you.